please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning. Hello and welcome to a fresh new edition of Trading Hour. I'm Prashant Nair. With me is my colleague Ekta Batra. The markets are not doing very much. We are 25-point change, 10,543. But I think this is a good outcome after the sort of sell-off that we saw yesterday in large caps, but more in a more pronounced way as far as mid caps and small caps are concerned. I mean, actually, those are the two indices nowadays that we should begin any show with, which is the mid cap and the small cap index. Mid cap index is up 0.25%, and the small cap index, I mean, that index was down 2%. The small cap index was down about 2%, and I think today it is flattish, not doing very much. But that's where the real pain has been for a while. I mean, yesterday it was so widespread that I think except the PSU bank index and maybe the IT space for a little bit, everything else was down and out. Pharma, of course, the biggest loser. We'll touch upon some of these sectors, broader trends in a bit, but let's begin with some strategies as always. Let me also bring in my colleague Ekta, who's with us. Ekta, morning.
Hi Prashant, absolutely. So quite a day when it comes to a lot of news flow. We did hear from the Fortis EGM, which was quite quiet and subdued. But separately, we are focusing on State Bank of India, which is going to be releasing its numbers today. So that'll be something to watch out for. Expected to be a loss this quarter. Not to mention that commentary as well as asset quality will be key. Separately, other stocks include Dr. Reddy's, Cipla, which will be coming out with numbers, Bharat Forge, which will be releasing numbers along with all of the OMCs. So a lot to track in terms of specific stocks, and just look at the Bank Nifty, which is managing to actually gain around 0.4%. So a lot of stocks from the entire financial space which are gaining and showing some amount of momentum. But Prashant, you've done some more work on the oil and gas
I've not done any more work. JP Morgan has put out a note. I mean, this is essentially the fuel price thing that we were talking about yesterday. It still remains top of mind. We've seen another round of increase as far as both petrol and diesel are concerned. So while there is this continuing talk of what may happen because of what the government may do to provide some relief, the big talking point is whether excise duties can be cut, whether the government can ask state governments to cut VAT, etc. This is JP Morgan's view on the matter, and I read verbatim: a short-term fix would be an excise duty cut of between 1 to 2 rupees a litre, which provides some breathing space. But overall, they see a very low probability of the return of explicit subsidy regime given the associated problems, which include, according to them, credit rating, investment outlook across the energy space, etc. So they don't believe that the free pricing model is going to be broken anytime soon, even though oil prices are where they are at the pump. However, they continue to say if policymakers want to maintain free market pricing but limit price increases at the retail level, that would only happen if excise duties are cut sharply, which would mean a large revenue loss to the government. Hence, this would have to be offset by tax increases elsewhere. They also say that capping ONGC's oil realization is also a possibility. So they like OMCs. I mean, I don't want to put out what their stock calls, etc. are. But I think it nicely, in a way, summarizes what the market expectation is from that space, from the government for the oil marketing and upstream space. So will we see either excise duty cut or capping of ONGC's realizations? I mean, I guess we only are going to be wiser in hindsight, and that may for some time provide, I mean, the former may provide some relief for oil marketing companies, however short-lived it may be. But I thought it's a nice way to sort of put things in context for that space, both upstream and downstream.
Yes, absolutely. I think commentary is going to be extremely important for all the companies that report numbers today, from the oil marketing space to State Bank of India to the likes of the pharmaceutical stocks. But let's get talking about the technicals of the market now. We have Sudarshan Sakhani joining in to discuss exactly that. Sudarshan, hi, morning, over to you for the Nifty. We're seeing a bounce back after 5 days of losses, but not much, still just higher by around 22 points.
Yeah, good morning again. See, after 5 days of losses, everything should bounce back, and that's exactly what the Nifty has done. I would consider this to be a relief rally. It's difficult to quantify the extent of the rally. It could be 50 points, it could be 30 points, it could be fizzling out now. Maybe we'll go to 10,600. But I do not see this as the beginning of a new bull move. So the view is that we have ended the up move. We are now back into that intermediate downtrend. The Nifty slowly should slide down towards 9,500. This is a view for the next 2 or 3 months. So selling is advised when markets rally in this environment. So there is nothing to buy in the Nifty. If the Nifty reaches or comes close to 10,600, traders should build short positions for the expiry on 31st May by buying put options. So that's the view for today. Any rally towards 10,600 is an opportunity to build short positions. Individual stocks do their own thing, but even here, see how mid-caps have been punished yesterday, and that tells us this decline is not over yet. This was not the end of that punishment or end of that bear decline. There's much more probably in the next 3 months or so. We are going to be into troublesome periods. Bank of Baroda is a short sell. After that very silly and brief rally yesterday afternoon, PSU banks are back to what they usually do, slowly drift downward. So that's a short, just to keep a little the environment a little cheerful. I have 2 buying ideas. One is Britannia and the other is Pidilite, both from the consumer durables FMCG pack, and that's the sector that's outperforming. And for the day, hoping that the Nifty will at least maintain its levels, these 2 are buying opportunities. Please keep the trades intraday. The markets are not giving us opportunities overnight.
Okay, PSL, Bank of Baroda, and 2 buys, Pidilite and Britannia. Sudarshan, let's get some questions from our viewers to you. Tarun is writing, he's got United Breweries, doesn't mention how many, but he's paid 1,159 rupees a share for them. He wants to know what to do with it. United Breweries. Well,
yes, Prashant, he's a gentleman, is very sensible and lucky both, I guess. United Breweries is one of the few stocks that can not only outperform the Nifty, but it can go up even while the Nifty goes down. So I think he should stay with it. An immediate target of 1,400 is visible. I cannot tell you the time when that will come, but that level should come. So don't be under any rush. Be prepared for minor dips and corrections in the stock price and wait for the targets. You will probably get it and probably get more.
Okay, so that's on United Breweries. We have another one, Sudarshan. So Haas has 100 shares of Cochin Shipyard, which he's bought at 552. So he's making a loss there. And GMDC, which he's bought at 152. He wants to know what to do with both of these, hold or sell.
Like that, this is a pity because I think a lot of people who bought mid caps are making losses, at least in the short term, at least mark to market losses. I mean, until you don't sell, it's mark to market, but it's very much there and it's very much real. If the gentleman is having a short term view for the next 3 to 6 months, he should sell Kochi Shipyard and he should sell GMDC. Both are likely to see lower levels. Now, if you're a long-term investor, if you're prepared to wait for 3 years, the chances are that both stocks will give you rewards and returns. For the short term, I'm assuming the gentleman or the person is short term. For the short term, both should be sold into, both should be exited by selling. We are looking at lower levels in them.
Okay, all right, Sudarshan, thanks very much for joining in and bringing us all of those technical calls. But for the mid-cap index, it looks as though we're probably not going to sustain any sort of levels in the green. Looks like we're probably going to slip into the red again for the mid-cap index. It's very precarious at this point, just 12 points higher for the index itself. And the advanced decline ratio, though positive right now, seems as though it'll probably turn towards the red line soon enough, and maybe the crisscross should come up for you. Yes, that's the advanced decline ratio. But we have Gaurav Bissar joining in of LKP Securities to talk about more strategies. Gaurav, over to you then. What are you recommending?
Good morning. The first recommendation would be buy on Syndicate Bank. This is one that has been struggling around 44-45 mark. 45 call option had a very high concentration. It's now trading above these levels. So a breakout on option wise and also on the daily time frame, I think it garners a buy, a trading buy, target of 47.50, stop loss of 44.90. Secondly, buy on Idea. This is another name. We have seen significant short positions getting built. It has already seen a good correction, bounce back from the crucial support levels of 52. It's been trading in the range of 50 to 54, again showing early signs of breakout. If it holds 54, it can fill the gap towards 57, 58 marks. So this one is quite favorable. One can have a stop loss of 53, buy for immediate targets of 56. And the sell recommendation would be on IGL. It's fallen a bit once the market corrected in the last few minutes. A jump up toward level of 256 can be utilized to sell IGL, have a stop loss of 259. On the downside, target of 250 can be seen.
Okay, thanks very much for those trades. Appreciate you joining in with that as of now. Okay, there's news at the bottom of the screen. This is with regards to Tata Steel, Bhushan Steel, and the update which is coming in is operational creditor of company L&T's moved NCLAT to challenge Tata Steel's bid. I guess that's what L&T Finance, you know, it says a creditor of the company. So I'm assuming that is the one is going to challenge Tata Steel's bid. The news which is coming in. We'll get you more details.
So no, we can't sustain our gains at higher levels. The Nifty as well as the mid-cap index have now slipped into the red. So it's down around 3.7 points for the Nifty, and the mid-cap index is now down around 23 odd points. Let's see whether there's any sort of buy on dips that emerges. But as of now, it seems as though it is unlikely, and it is the Bank Nifty which has actually reversed all of its gains. So let's see what happens with the likes of State Bank of India that comes out with numbers later on in the day as well. So as of now, the mid-cap index is just about down by around 20 odd points. Remember, complete underperformance for the mid-cap index in the past couple of sessions. But let's move on to some other news now. The upcoming board meeting of the insurance regulator will be crucial for various insurance segments, and particularly for the reinsurance space. We understand that the IRDA may move towards giving a level playing field to foreign reinsurance branches against state-run GIC reinsurance. Yash Jain gets us this report. Yash, over to you.
Well, absolutely. The upcoming board meeting of the insurance regulator will be very crucial for GIC-RE, and here's why. What we're given to understand is that the board of the insurance regulator is likely to consider the recommendations which were submitted by the reinsurance expert committee. Remember, these recommendations from the reinsurance expert committee essentially suggest a removal of the preference order or the order of preference in the reinsurance space, which at the moment give an edge to GIC-RE over the other FRBs or foreign reinsurance branches as far as acquiring any sort of business in the reinsurance space is concerned. Now, before we move forward, let's just understand what the order of preference really means. So currently, under the current mechanism, any insurer who wants to reinsure any particular policy has to submit that policy with GIC-RE as well as 3 foreign reinsurance branches. Once a quote on that particular policy is received from the foreign reinsurance branches, that has to be disclosed mandatorily to GIC-RE, which is then given a chance to match the best quote or the best bid. In this situation, most of the times GIC-RE matches the best bid and takes the business, whereas the foreign reinsurance branches, despite giving a more attractive offer in the first go, lose out on the business. But when we are talking about this new proposal, and if that is approved, then the insurer will have the freedom to go to any reinsurance company and really select the best bid in the first go itself by bypassing GIC-RE in this entire process. So that's the kind of change which we are talking about. But do remember, this particular order or the proposal is not a blanket proposal. It will only cover certain segments, and these segments include agriculture, large infra projects, marine, aviation, life insurance. I've also given the respective individual premium which GIC-RE collects from these individual segments. Of course, goes without saying that these segments are the most lucrative segments for GIC-RE, and if you look at the total premium collection from these segments, it comes up to 13,131 crore out of the net premium collection of over 30,000 crore, which is a significant 43% of GIC's premium collection. I am not suggesting at all that the entire 43% or that 13,000 figure will get impacted, but yes, there will be a significant impact which will be felt as far as the premium collection is concerned for GIC-RE if this proposal goes through.
Okay, 40% essentially of GIC-RE's premium is collected from these segments. And yes, you were telling us that, I mean, if these proposals are accepted, they don't get a preference. I mean, this is like, you know, state-run BHEL getting preference on contracts, right? I mean, but if this change comes through, insurer in any of these segments can go to any player in the reinsurance space. The question is, are there other reinsurance players who can pick up the tab? There are foreign players, but are there any local Indian private players?
See, Prashant, it's been a year and a half since foreign reinsurance branches made an entry into the Indian context, and one complaint which they've had so far is that they lose out on a lot of business as far as the current mechanism is concerned. So yes, it will be beneficial for them because business will come directly to them and they will be able to attract that business based on merit. As far as the Indian player is concerned, there is, of course, a company called ITI Reinsurance, which is owned by Fortune Financial. That company hasn't written any business so far. Of course, this is one of the major reasons why that has happened. So, of course, that will also smoothen the process for ITI Reinsurance as well.
Okay, all right, Yash, thanks very much. Very interesting story. And this may, I mean, this is, it can't be any way you see good news for GICRE. Let's just quickly put the stock up. I just want to take a quick look at if the stock is reacting. It, of course, I mean, the proposal has to be accepted in its entirety or partially. Only then does the impact come through. But even if it is partially impacted, it's not good news. 696, I mean, it's not heavily traded or anything. It's not a very old listing as well. It's about 0.25% lower. We'll come back to that story with maybe a reaction from the company itself in a bit. But for now, let's bring in Manisha, who is ready with what's happening in the world of commodities. We're talking about agri-commodities, Manisha, sugar specifically?
We sure are, yes. And what a mover it really has been in the global markets and the Indian space as well. Overnight, the New York prices have gained up by 4%. Last 4 days, that really adds up to 9% of gains in the sugar prices in the global markets. Much of the good news, of course, is coming in from the Indian space, where there are sources telling us that the government is looking to put a floor price for sugar. So that really has led the mills to not sell sugar into the markets at these current losses. That actually has pulled the prices on the higher side. Apart from that, the government also is perhaps looking at increasing or making a buffer stock, creating a buffer stock of 3 million tons for sugar. The government may assist the sugar mills to enhance ethanol production capacity as well by giving them soft loans. So there are these 3 or 4 things that the government is mulling over right now. There has been a meeting over this, but the decision, of course, is still awaited. But just that much has been enough to keep the sugar prices and the sugar stocks much on the higher side. M. Manikam, Executive Vice Chairman of Shakti Sugars, now joins us for a reaction of that. Mr. Manikam, hi, thank you so much. We, of course, have been, the industry that is, has been waiting for more measures, steps that can support on where we stand right now. Amidst all of these 3, what do you think would be most important, and what have you been hearing, of course, from the ministry?
I think one of the major important things would be the ethanol, because I believe they're talking about having 22% blend in petrol and about 15% blend in diesel. And that should increase our consumption quite a bit. And only thing that we have to wait is the pricing of the ethanol, what kind of pricing they're going to do on it. And if the pricing is done well, I think it will save the country a lot of foreign exchange and also get rid of a lot of stock of sugar. So you'll see a big change happening in that.
Mr. Manikam, what is your sense? Because the major issues right now, of course, is one that the sugar prices have fallen by 30%. They are down almost 20% from cost of production. And whatever measures that the government has been taken haven't really helped. So with the cane arrears as where they stand right now, do you see any direct, indirect help coming in from any of these measures that the government is looking at?
See, the first thing is the government has now recognized that there's a problem. I think hitherto the issue was they didn't really think there was a serious problem. They were saying, okay, it'll get over as market liberalization and all those kind of concepts. But now they realize that there is an excess production of sugarcane. And the 2 reasons that we have for that is, of course, better yield and the higher prices of sugarcane which has been announced. So they need to act on both fronts. One is to increase consumption of the products, which is basically ethanol, because sugar consumption is growing at about 2 to 3%, which will probably keep growing at that. So you can't increase sugar consumption by any much. So the only thing we can do is to increase the consumption of ethanol and possibly also freeze the sugarcane prices. These 2 things will make sure that we get back onto our feet within a matter of next 12 to 18 months.
Mr. Manikam, we are already in the, it's mid-May already. Would you say that the steps that the government is taking or is already delayed for that sense? How much of that would give an impact to the industry as of now? How do you look at the timing of it all?
So right now, I don't think we can produce ethanol because the season is over. The ethanol production is going to probably start some October next year, right? So you will see a lot more ethanol being produced. If that happens, and all kind of numbers that they're saying, next year the sugar production could actually go down because a certain amount of diversion from sugar into ethanol. And if we have a production of, let's say, 27, 28 million and consumption of 25 million, then we are okay. I think basically it just needs about 2 million tons of sugar to be diverted to ethanol, 2 to 3 million, and that should help us to sort out the whole issue.
Well, that point is well taken. Thank you so much, Mr. Manikam. So clearly, it's quite delayed from what the government is coming in from. Crushing is done, and whatever, even if something comes on ethanol, it's way too delayed for the companies to make use of that. But one important point also is in the other industry, and that clearly has been the crude oil prices. More sanctions perhaps coming in on Venezuela, Iran already reeling under all of that. There is an international energy forum happening, and markets would perhaps be watching for much of those cues coming in from Russia as well. Kunal Shah of Nirmal Bang then joins us to talk more about that. Kunal, what is your sense when it comes to crude, and what factors are you watching out for in the international markets?
Well, right now, fundamental factors have completely gone out of the market, and market is only focusing on what kind of sanction US is putting on Iran and perhaps on Venezuela, and that premium is continuously getting built in crude oil. So Brent is already at $80. Remember, we have OPEC production cut, which is the major reason for the bull run in oil prices. But in spite of that, we've seen US production moving up by almost 1.25 million barrels per day and likely to move up by another 1 million barrel per day. So I think it's just the geopolitical news flow which is coming in that is driving oil prices. So I do not think that is more to do with fundamentals right now. And until and unless you see any signs of that abating, oil prices are not going to correct and crash sharply. But fundamental call is very clear. The moment this kind of news flow is out, at that time oil will peak out. So I'm not of the view that oil will go to $85, $90. Perhaps Brent on 82 max. I'm not very bullish, and I believe that once the announcement comes out, the final leg of bull run will take place, and after that perhaps you may see again a correction, because US oil production will move up from 10.6 to 12 million barrels per day. So a lot of these supply concerns will be abated by the US increasing oil production.
Sure. Kunal, a word on the metal space as well, because while the fundamentals do look strong, whether you look at lead, aluminum, copper in the Shanghai markets, clearly it is the LME and the Indian markets which haven't been able to make use of that news.
We are very bullish on lead at this juncture. China, which was the major exporter of this metal, especially the secondary scrap of lead, now it has turned to a net importer of lead scrap. So I think this metal is not perform as compared to the other peers. Lead one can go long at 162, 161 on MCX, with a stop loss plays at 158 and expect prices to move up and test levels of 166 to 167.
Okay, all right, Kunal, as well as Manisha, we're going to leave it on that note. Thanks very much for joining in and tracking all of those cues which are coming in from the commodity space. It is all the sugar companies which are in fact up and about today. So Dhampur sugar, for example, is up around 4.4%. Dalmia Bharat sugar also has spiked up around 3.8%. But separately, some news with regards to Reliance Communication, where they filed an appeal before the NCLAT challenging the NCLT order in the Ericsson case. So let's see whether their appeal gets heard or not, but this is what they've done